So Marcus, before we get back to crypto, I want to talk about the 401k for a second.
Mhm.
So someone doesn't understand why a 401k is important, right? Why, first of all, what's the benefit of putting money in my 401k and rather than just keeping it into an account and pulling it out when I'm older? So I want to start there with just the whole idea of like tax benefits and like why even pivoting now is so important. Because why do I care how much money I have when I'm retired? What is it, 64.5? I don't know how old you have to be to pull
65,
out from your
somewhere around there.
retirement.
You get your Medicare, get
Yeah,
your yeah, so
yeah,
and that's another thing of like, younger investors, they can't it's hard to see that far out. So you can't think that far out, but a couple things. So say you're a higher earner or any earner, if you contribute to your 401k pre-tax, that reduces your taxable income at the end of the year. You also have the option to contribute to your 401k with the Roth portion now. I think that's an option for people where you can add up Roth inside of some plans, so that's after tax money. And when you retire, that money is that money. That's one of my clients like to
right.
say, that's real money. Like that's your money. But with the pre-tax, you get the pre-tax benefit of at the end of the year when you do your taxes, it's a tax deduction, tax break.
Yeah,
And then you also have the investments that grow tax deferred. You will pay your taxes on one day. And one of the biggest things is a match. You get the match from your company. That's essentially free money. If they're giving you 3% to match your 3% or 5% to match your 5%. Otherwise, you could be in an IRA and get the same benefit,
yeah,
except for the
yeah.
match.
And just to clarify for those listening, when you put money in your 401k, it's money that you haven't paid taxes on. So either that money would be considered income, and you'd be paying and I'm not an accountant, so speak to your accountant, but that money that since you have $1,000 that you're going to put in your 401k, that's money that the IRS never charged you tax on. That's money that goes into your 401k, and you pull it out when you retire. And that money also, when you keep it in an investment, it gets compounded over time. So what seems like a really small amount, 3-4% a year, from when you're 25 or you're 20 to when you're 65, turns out to be a whole lot of money. So planning early and putting a little bit early on is super, super important. And by the way, you could pull that money out later. You'd be charged taxes on it. There would be some penalty, but think of it also as like things can go sour in life and you can have real financial hardships. And sometimes people do need to pull out that money early. And there is an option where you can do that. Obviously, you'd have to pay taxes on it and you'd have to pay the penalty, but there's also benefits. I know like with certain retirement funds, you could take out X amount of dollars on your first home, right? Correct me if I'm wrong there, Marcus. You can take around $10,000 if you're purchasing a house.
For a down
That's
payment.
and that's for down payment, and you won't be paying taxes on that. So even understanding the lingo and the language, and just even doing some Google searches and watching some YouTube videos can really give you just a perspective. And that's what's important. It's not knowing exactly where to put your money at this point in time. It's about even understanding the language, the vernacular, and how to think like someone who's always pivoting, because you're going to realize early on, yeah, you're going to do a lot of grunt work and you're focused on making money, but you have a second job. And that job is building wealth and learning how to take your money and intelligently manage it so that it can actually grow and work for you.
Right. Michael,
So,
I just want to,
mm,
can I just clarify one thing? I'm sorry. I didn't mean to jump in.
yeah, yeah,
You
mm,
will
of
eventually
course.
pay those taxes on that 401k money if it's in the pre-tax. So you'll pay it when you retire. That's what happens to a lot of people. They'll, if they retire, they accumulate all this money. You get to 63, you've never paid taxes on it. You say, I need $100,000 for this first year. Uncle Sam says, okay, pay me my 35%. And he's just as happy that you're retired as you are.